Mavericks? How's it going? This is Rob Reinhold. It is May 2nd. I cannot believe it's May already. And we just got through what was the worst April since 2008. The S&P was down about 7.5%. The Nasdaq was down over 12%. That's a big drop. And so I wanted to start with that just to show that we are at extreme levels. And that's what we talked about over the weekend in our trading room, was that, okay, we are now trading at extreme levels. And when we get to extreme levels, we tend to get extreme moves on both ends. If we take a look at what happened today, we did have an up day across the board. So Dow up 0.25%, S&P up 0.5%, Nasdaq was the outperformer. And if we take a look at the charts, we can see that we got a nice little hammer candle down here. Now, we always talk about when you reach a support level, what happens a lot of times is it likes to get pierced. It gets pierced, it creates a little bit of panic, and then it ends up bouncing back and closing positive for the day. So we did get that for today. So for any of you who really wanted the market to crash and fall apart over the next day or two, this candle pretty much says, you better hold your horses. It's not right here, right now. And we actually closed near the top of the range, which tells us that into the close, we actually had a little bit of buying going on. If we take a look at the Nasdaq was even stronger today. But again, we still pierced below and we closed up at our highs. This doesn't mean the trend has changed. This doesn't mean it's an uptrend. But what's telling us that, okay, the selling pressure that was so heavy on Friday has taken a break. It's taken a breather. So let's take a look at stuff like the advanced decline line, because I think that is really important to understand, okay, where we are here. Today we had an up day, but look at the advanced decline line. 58% of all stocks were down. Take a look at how many stocks are trading above or below a 50-day moving average. It's atrocious. Take a look at this heat map, and you can see that outside big cap tech, the market didn't have a good day. But seriously, I mean, take out Microsoft, take out Google, take out Facebook, take out Tesla, take out Home Depot, take a lot of these things out, and it's an ugly, ugly day. So the headlines, the Dow and the S&P and the Nasdaq, they were really rescued by the buying of big cap tech. When you take a look under the surface, it still doesn't look very good. So we remain on the bearish side, but we do have to take a look at the charts and say, okay, we did get that hammer candle today. So maybe we have to get a little bit less bearish. And that's it. So we started the week off with a -3. We got that push down. We got the recovery. Okay, we're still negative. We're still to -2, but it's not we think it's going to drop and just drop substantially like we kind of did over the weekend. So we're still bearish. Nothing has changed. Everything is still bearish. We have a 20-day moving average now crossed below the 50-day moving average. There's just nothing good technically here. We absolutely could get a bounce. We could continue to bounce. And frankly, we could bounce all the way up to really 430. Now, theoretically speaking, that would be an acceptable bounce up to that level. There's a lot of room in between those points. That's a fairly big rally, but we still think that these rallies fade away and that you want to be a seller of rallies, not a buyer of rallies. So let's go in and take a look at some potential trades here. And I've got to say that not a lot triggered. So I looked at all my trades that I had set up over the weekend, and really only 1 or 2 triggered, and that was it. All my shorts had bounces today, and the longs I was looking at, they didn't really follow through at all today. So let's take a look at just some that did trigger. Here is Exxon Mobil, and the only reason it's triggered because we were doing a diagonal call spread. So looking at doing the 85, 90. So doing the May monthlies, 95, and selling this week's 90. Again, as long as it stays in this area, once it stays in that area, that's going to be a really nice trade. And if it gets up to 90, that's our max gain point. Our risk graph on these diagonals looks something like this. So 90 is going to be the best. Our break even is probably somewhere around 86 here. This is just a really boring basic trade to do on a stock like Exxon Mobil as it hangs out in its ascending triangle pattern. That's all it's doing. It's hanging out in an ascending triangle pattern, working higher. The energy stocks worked really well today as well. So if you wanted to take a look at the other bright spot outside of tech and big cap stocks, it was energy. It actually performed pretty decently today. Another setup I like is on MAT, Mattel. And look at the candles. The candles over the last 4 days have been really, really nice. Close or open up to the low, close it near the high, all green candles except for Friday, which is really a decent candle when you compare it to the rest of Friday. The only problem with this stock is we've got some overhead resistance up here at 25.50. So I think if you're going to make a trade, you've got to take a look, say, okay, it's at 24.71. I don't have any real clear indication that this is going to break out anytime soon. That needs to be the level. This is where I love to pull out our diagonal call spreads, where it is, you're saying, okay, you know what? I'll sell that 25. I'll buy the 22.50 longer term option, and I'll sell the shorter term 25. If it hangs out in this area, it's going to be a nice trade. If it goes above 25, again, you don't get any extra. You actually start to lose a tiny bit of your profit until it flattens out. But again, we're not calling for this one to really take off and run, but we think it's going to stay in the 24 to 25 area, which makes this diagonal call spread a great trade setup. We also looked at a 100 butterfly on Philip Morris. We talked about the 100, 105, 95. So this thing it was weak today, but you can see here it's still well within our range. This one's going to expire on Friday, so we'll keep an eye on this one. On the short side, nothing triggered today. So I want to make that clear. Nothing triggered. Pretty much every stock that was weak was up today, at least that I looked at. So I really took a look at, okay, which ones are on my target list for the week? Which ones do I really like for a short? And which ones had a nice bounce to short into? So here is Sunrun, RUN. It was up 9% today. It could easily go up to 24. So this is definitely not ready to be entered yet, but I just wanted to talk about some potential shorts in the future. When and if the market does turn down, I think this one is a great one because it came down and it's touched 20 twice now. If it comes down a third time, I think it could easily break through it. So I do like Sunrun on the downside. And then also Lucid. This is a car company, an electronic car company, highly valued just 4 or 5 months ago, not so much anymore. Again, this company is a long way away from ever making a profit. They do have a really cool car though. I gotta say, if you haven't seen the Lucid car, it is a cool car. But as far as the stock goes, as you can see, all we have is a low base here. So I'm watching, the weakest stocks out there saying, okay, which ones do I want to get in when the market turns back down? I think we could ultimately get up to this moving average, which is right in line with some other support and resistance. So anywhere above 20, I'm really going to be licking my chops, just waiting for a nice reversal candle and a confirmation to get short, because 15 is likely here on the target. Well, that's it for trades. Let's take a look at tomorrow. So we did have a stronger close. So whenever you have a stronger close, meaning that there was more buyers than sellers at the close, it typically lends to a stronger market tomorrow morning at the open. I could easily see a little bit of a gap up tomorrow, but I don't think these hold. We saw the internals today of the market. They weren't great. The headline number says, hey, it was an up day, but the average stock had a down day. And if it wasn't for the large cap tech stocks, we would have had a down day. So I still think we're seeing a lot of weakness in the markets, but you can't ignore that hammer candle. You just can't ignore it. So we've got to back off of our bearishness that we had just a little bit. Wait, not enter any more bears until we see this rally fizzle, and then we can take some more short positions. Tomorrow, all that's on the reports is factory orders, and we do have a lot of earnings. We are still in earnings season, so be aware of any positions you have with earnings. That is the market roundup. Thanks for joining me. Goodbye.